Talks, where we talk taxes and tax-free living 365. Here are your hosts, Craig White, Sebastian Singh, and Patrick Augustin.
And we're back with another wonderful episode of TQ Talks, where we talk taxes 365 all year round.
All year round, whether we want to or not. We're here, baby. We are here.
We want to, guys. You want to. I'm one of your hosts, Craig White, and the guy who is over here talking about all day, if you want to or not, is Mr. Sebastian Singh. What's up, Bassy?
Welcome back, guys. What's up, Craig? We have a lot to cover.
Tax season.
Yeah, it's fresh. It's new. We're right in the middle of it, too. Isn't
That's
that
where
crazy?
we're always right in the middle of it.
How?
I don't know.
It just started.
It did,
but it's because
like,
we do it 365.
Yeah, it's all the planning, people. So again, if you haven't been with us before, we'll do our little spiel. Our job is to help our clients to either reduce the amount of money they owe or increase their refund by, of course, tax planning with them throughout the year. And of course, our job is also to help people to get money now as well as through retirement and afterlife by giving them little known investment secrets through life insurance, which is also awesome. Love that stuff. But anyway.
Yeah, so we're excited. We're excited not only for tax season, but also for the planning that comes with it for our clients, for what they've been able to achieve, and also where they're going next.
Yep.
Now, with that, we have to plan for the day. Dun, dun, dun.
Yeah. So we always have these questions, right? Most of the stuff comes from people asking us or us digging around to figure out what the heck people want to know. And the question is, hey, when are taxes due? And that's every year. And I get it. It's kind of annoying and confusing.
And what's kind of fun is we give the same answer to a lot of questions. It's the same answer. It's, hey, it all depends on the individual's situation.
Yeah. Which really sucks. So what we're going to try to do is we're going to give you a very generic by the book answer for all the dates. And then we're going to go a little bit deeper, unfortunately, to Bassy's point, to help you understand why some people file at different times and you seem to file the same time every year. And I'm sorry if you do.
So let's start. Let's just go by the calendar year, right?
Yeah.
We have one due date, March 15th. Who's that?
March 15th is for partnerships, 1065s. That is one or more. Could be up to, I think, 100 people, whatever it is, that are in a partnership business. Those are business filings. And also S corporations, 1120Ss. Those are due March 15th.
March 15th. So that's coming up really soon.
Yeah. And now we're not going to get into that part. We're just going to stick to that. Now, the next date after that is the April 15th.
April 15th, which is for the majority of people in the U.S.
Yeah, pretty much. That's for most individuals. And it also pertains to C corporations. So that's just a plain 1120. Not no S's, no anything at the end, just 1120.
Right, and your Schedule C LLC is the one person ownership.
Right, which will also be on your 1040, which is your normal tax return
filing
as well.
Anyway,
so
correct.
You're all there. So now it shifts, right? Because like you said, March 15th comes up like a month, which is crazy.
So what do we do?
We file an extension, and here comes the gambit of why crap goes crazy.
Right, tell us.
So usually for us, most of our corporations, partnerships, C-Corps. We don't have that many C-Corps, but a couple C-Corps. Either way, we, by the beginning first week of March, we're sending out those texts, emails, those calls like, hey, we're going to file an extension. Whether these people are ready or not.
On your behalf. We're just doing it for you.
We don't want to you have to deal with it. So when the extension is filed, it then moves you 6 months out for you to now have 6 months more to file your tax return.
Correct.
So that puts you in what? October, September? I'm bad at the math. So March.
We're doing 6 plus March is September. 6 plus April is October. October is the one, again, majority of people that do extensions and majority of people in the U.S. are used to because it's 6 months out of April.
And that's individuals. Again,
correct.
Businesses and individuals are different. So the businesses 6 months out, you said, is September.
Correct.
And then the same thing would happen. April 15th is coming up. Oh my gosh, panic. I don't have my paperwork in. Fine, we'll file an extension. We send it in. That moves you to October 15th.
Correct.
Before things are due. Now, like last year, it threw a monkey wrench because the 15th came for April and it was on a Sunday.
Yeah,
and then we had a holiday on the Monday.
Right.
So it moved you over the next day. The next business day is how that works. I think the filing was like on the 17th or something like that. 17th, I can't remember. But that's what it is. So, guys, the extensions are there. Now, there's things you have to understand. I think we covered this. I'm pretty sure we covered this on another podcast, but there's penalties.
Correct.
Right? It doesn't mean that the extension moves you away from if you owe money.
From the not paying.
Right. On the individual side. If you owe money, guys, you still owe that money and you will get penalized. There's 2 penalties, a failure to pay and a failure to file. The extension waives the failure to file. It does not waive the failure to pay. So the IRS is still going to bang you and say, hey, we got it. We know you need more time. But guess what? You had a whole bunch of time and you still owe our doggone money.
And in the meantime, you do get more time to file. However, we're going to start these penalties and interest from when it was owed.
Right, correct. So, and again, businesses, the extensions don't do anything because if you guys don't know, businesses do not pay taxes. C Corps pay taxes.
Correct.
State and federal, but because they pay on it, that's a whole other topic. But most corps, S Corps, or if you're treated as an S Corp, and most 1065 partnerships also do not. It just transfers over as a K1 to your personal, which is funny because on the IRS's site, I think they even show that K1s are also due at those same times, whether it be March or April. Well,
right.
Not for April for them, but you know what I mean.
Yeah,
March.
It's to then get it into the individuals who have until April to file.
And there's the other part, right? We say we're trying to make it complicated, but if you have a partnership or a S corporation and you're distributing K1s to the people that are involved, you got to think, just because you put an extension for your business and you're not doing any work on that business till, let's say, June or July,
right?
That person who has to file their personal is held hostage, or those people, because the K1 is a necessary evil to be attached to their personal taxes.
So let your people know if that's the situation you're in, and we do have some clients that do an extension every single year. Every single year.
Which is fine.
And that's just how they operate. They know, we know, but we also urge them to let their contractors know, or their whatever they have going on. Just let everyone know, hey, this is going to come out XYZ. Make sure you take care of it on your end.
Right. If you're part of that business, that's something that has to be discussion. And the other part is for people who don't know what this means, right? Guys, if you're in a partnership or you're in a corporation, S Corp, and you are listed as someone's partner, these responsibilities fall on you. So somebody has to file. Partners. And a lot of times what we notice is that it'll be great intentions. It'll be, let's say a mom or a dad who sets up a business and decides to add their kids or their siblings or spouse to that business. Well, automatically you're now shifting yourself from a single member LLC to a partnership, which means you're now the 1065, and that means that those individuals have to get the K1s. And so without them knowing, they're part of it. So if you're listening to this and you'd say, oh my God, my sister did ask me if I wanted to be part of it.
Someone did say something, right?
Then guess what? You have a K1.
And if you're not gonna check, the IRS, they'll let you know at some point. So we wanna have you get the jump on them.
Yeah, guys, just be again. It's all about knowledge and learning, and that's what we're trying to do, is to educate you guys. Make sure that you pay attention to that. Understand and be aware that yes, this is a form I'm going to get every single year if I'm still a part of it. If you don't want to be a part of it, let that person know, but you have to report it. The income or loss can help or hurt you, right? The loss is probably going to help, but if the business had a loss that year, but the income is going to be taxable income.
It's something to talk about.
Right. So you guys got to make sure you focus on it. So again, we hope this helps everyone to understand when the due dates are, when the regular dates are, your extensions are there, and take advantage.
And if you are chasing a refund, or owed a refund, of course, the quicker you get your taxes in, the quicker that gets to you. But yeah, please follow us on all social media platforms, TQ Financial Services, and you can find this podcast as well as all of the many, many others that we have done in the past on all your podcasting platforms, TQ Financial Services. Please like, share, comment, and reach out to us. Let us know what you like, what you don't like, and what you want us to cover.
Yeah, any questions, 800-413-1456. Thanks for taking the time to listen. We hope it was helpful. We'll talk to you later. Peace.
Thank you for listening to TQ Talks. If you enjoyed this show, please rate and recommend on iTunes, SoundCloud, or wherever you get your podcasts. You can also get more information at TQFinancials.com.